lot of their financial instruments called LIBOR. And you call this the bank service's latest trick.
Actually, I misspelled that on the notes I sent you. It's called the bankster's latest trick.
The banksters.
That's a combination of bank and gangster. So let's talk about LIBOR. LIBOR stands for the London Interbank Offering Rate. And this thing started back when I was young, at the beginning of the 20th century. And it was supposed to be, this is when the British banks actually ruled the world. And there were about 7 banks with names like Barings and Rothschild and Barclays and this sort of thing. And they almost every financial transaction in the world went through those banks. So they had set up a rate that they were going to buy and sell money between themselves, and that became the rate for everybody else. And the English at that time were really impressed with themselves. There was a famous headline in the London Times about this point in time that said, "Fog in Channel, continent isolated." So, they thought they were more important than all the rest of Europe, and in fact they were. So they set up this rate called LIBOR, and it was broadcast, and every day at 11 a.m. London time, they would set this rate, and then it would go out by telegraph or telephone or cable all around the world, and everybody would set their rates based on that. And when I was just getting started in this business, that was one of the 3 numbers you knew every morning before you picked up the phone the first time. You knew the T-bill rate, you knew the prime rate, and you knew LIBOR. It was that critical to everybody. So it was never intended that this thing was going to be some sort of a transactional rate. It was basically a guideline. And, banks buy and sell money from each other all the time when they have they have issues with their balance sheet where maybe they've lent too much money and they haven't got enough cash on hand to meet standards. They'll go out in the open market and they'll borrow money, buy money, and then they'll pay it back. And you can borrow money overnight. You can borrow it for a day, a week, a month, a year, or whatever. So there are a number of LIBORs for whatever you're doing. And that was the rate at which the banks would buy and sell money. Another rate that's used in the United States is our discount rate, which is where you borrow money from the Federal Reserve.
Which I'm sure is a whole other story.
Oh, yeah, we'll get into that later. We'll get into that later. In the 1970s, we had a period of really high inflation. And the late lamented Lehman Brothers came out with a bond that had a floating interest rate. Now, most bonds, the interest rate is fixed at the time of issue until it matures. Well, this thing had an interest rate that floated, and it was set off LIBOR. And so it was LIBOR plus a certain amount. And if LIBOR went up, the bond went up. And it was great in inflation because short-term interest rates were higher than long-term rates, and the Fed was raising interest rates. And this gave people a chance to maybe catch up with inflation. Not really, but it was a good game. So this thing was extremely profitable and extremely popular for Lehman Brothers, and pretty soon everybody was issuing these things. And that started a whole new market of swapping, of borrowing money and having the rate be flexible rather than being fixed. And it really created a whole new market. Now, it went on this way, for a long time until 1984, when the British Bankers Association took LIBOR and they trademarked it, which meant that they could sell that name to the banks. Now, the banks were given it, they paid once, but they could use it forever. So all of a sudden, all the bankers were being encouraged to use LIBOR, and they started creating products which had floating rates, which were off LIBOR. Now, they didn't understand them either, and they were just a bunch of crap floating around the world. Now, today, just to give you an idea how big this thing's gotten.
And this is an insane number.
Yeah. LIBOR is the basis for $350 trillion worth of financial obligations. Now, for those of you in Algona Pacific, that's 1 followed by 12 zeros. And that's bigger than $1 billion. To give you an idea, the U.S. gross domestic product is $14 trillion. So this thing is $350 trillion in assets around the world are based on LIBOR. So this is a somewhat important rate. Now, most people would think, okay,
is this assets and liabilities?
This is assets and liabilities.
And the bank just kind of takes their cream on both sides?
Yeah, exactly. And they float on LIBOR, and they buy at LIBOR, and they lend above LIBOR. So they buy LIBOR right now. It's about 0.37% overnight. You borrow at that, you lend it at 6, and you go to the golf course at 3, which is the way these guys operate. All right. So today there are 18 banks that set this, and you would figure that it's most of the banks you already know. There's Royal Bank of Scotland, which was so feckless in their lending that they had to be bailed out by the British government. Then there's Citicorp, that great misshapen monster of the world that probably should have been shot a long time ago. Then there's UBS, which of course has been involved in tax fraud and all sorts of things out there. There's J.P. Morgan, where the rogue trader managed to cost him $9 billion and counting. And then, of course, there's my favorite financial institution, Bank of America, where rogue traders are a way of life. And these guys are all involved here setting this rate. And every day they set this rate. So here you have a bunch of rogue banks setting the most important rate in the world. What can possibly go wrong?
No, I can't imagine.
So what happened now is people were thinking this rate was somehow magically, there was a giant computer someplace like HAL wishing away and all the stuff was coming in, the lights were going on, and it was thinking it's up. But let me tell you something. That's not the way it got done. The way it got done was basically 18 guys got on the phone with each other every day and talked about what they were doing, and then at 11 o'clock they published it. It's always been that way. And these guys all go to the same club. They all drink at the same place. I mean, they all went to school together. These aren't people who are, these aren't independents around the world. These are all guys who went to Balliol College at Oxford or whatever, and they're all wearing striped ties, the droopy socks that British guys wear. And they do. They all wear these socks. It sort of typifies the British Empire sliding into the sunset. But anyway, sorry, the British are out there. Anyway, it's the 4th of July, down with the redcoats. Anyway,
I love your patriotism.
Yeah.
You're on the 4th of July week, too.
Yeah, by the way, Bryce was talking about the tax code. You realize the Declaration of Independence is 1,300 words? And I bet you it's done more good than the 7 million words in the tax code. Anyway, back to this thing. So what happened was one of these rogue banks, Barclays, their derivatives traders were telling their lenders that they had to change the rate that they were posting as their LIBOR input so the derivatives traders could make more money. And the lenders were doing it. Now, if Barclays was doing it, I'm telling you, there are other people doing it. Okay? The point is that some of you out there have mortgages that are linked to LIBOR. Student loans, by the way, are linked to LIBOR. And this rate has been really kind of phony for a long time. It's always been a manipulated rate. So the question I have is this, and out of this whole thing, we've had one person quit already, and that was the chairman of Barclays. Barclays is going to pay $450 million. Oh, big deal. Wonder how much money they made. When are we going to stop treating these banks like victims of stupidity and treat them like what they are, which is racketeer-controlled organizations? I wonder if I had a mortgage or a student loan linked to LIBOR, could I sue the consortium of banks, those 18 banks, as a class action and get the money back that for the manipulation they made? These guys have been, think of this, $350 trillion.
It's like all the money in the world. I mean,
pretty much.
How much money is there in the world?
Pretty much. That means all the money you can possibly think of. I mean, I would have a hard time spending that much money. And it was,
even at Blue Martini.
Oh, yeah, without Blue Martini. Yeah, well, those of you who haven't been to Blue Martini, you should go. And take your credit card, though. They'll remember you too, by the way. So anyway, this thing has just been set, and so now here's another thing where the banking industry has covered itself in fecal matter, and the world is now looking at these banks and they're saying, "Can I trust them?" And can you trust any financial institution? And these guys, this is all because a bunch of people wanted to make a few basis points more in profit, and they just wanted to figure a way to do it. And we need to start treating these banks like what they are, as criminals.
And isn't that kind of the same thing? I mean, the GlaxoSmithKline deal earlier today. I mean, these corporations, there's so little accountability. They pay a $3 billion, or as you said, Barclays paid $450 million, but they made 10 times that. So what's the real penalty?
I don't know, and I don't know why you would sell antidepressants to kids. I mean, I've never met a kid yet that wasn't depressed. It's called puberty.
All right, Dennis, with that, we have to go to break. We're going to come right back, and I think we can talk a little bit more about personal accountability and the big companies' accountability and how that all works. We'll be right back after this break. You're listening to Brashenomics.